Hi, this is Jonathan Simon with Horizon Payments, and today we're going to be talking about what to do if you have a Square, PayPal, or Stripe account that has been frozen. Now, who will this presentation be interesting for? Well, as I said, if you have a frozen or closed merchant account, if your processor has started withholding more of your revenues, or if they've started holding some of your revenues, what's known as having a reserve. If you have an online or non-traditional business, those guys tend to have a lot of issues with merchant aggregators. If you're looking to find out more about processing or aggregators. And finally, if you're simply researching what to look for in a potential processor. So just a quick overview. We're going to talk about how Square, PayPal, and Stripe are different from other processors, why accounts get closed, and finally what to do when your account is closed. As I said, Square, PayPal, and Stripe are not like other processors. They're what's known as aggregators. And what aggregators do a bit differently from other merchant service providers is they provide their merchants with a sub-account and process on behalf of their merchants using their own account. Now this means that they have greater control over your account and money. And they also focus on account acquisition, not retention. So as we'll see, they have generally little customer support, and it is more profitable to their business model and portfolio risk to acquire new accounts than to necessarily maintain them. Aggregators focus on account acquisition, not retention. They have simple onboarding processes, and in their business model, new acquisitions make up for lost accounts that are frozen. Their customer support and retention is not a main focus. They have very lax underwriting, which allows automation. So while this is good for signing up to get a new account very simply and easily, some of you probably have personal PayPal accounts that it only took about maybe 5 minutes to sign up for. It can also lead to other problems such as reserve requirements, frozen transactions, account holds, or possibly termination some point in the future. For them, client acquisition drives their profits. So more money is spent on marketing and advertising and new acquisitions, again because they have such easy onboarding. And portfolio risk is eliminated if an account raises flags. So if you end up having a problem somewhere down the road with your merchant account, you won't get the support you necessarily need with Square, Stripe, or PayPal, since for them it's actually better to spend their time focusing on new acquisition rather than retaining old customers. So I just pulled these screenshots off the websites of the respective companies. As you'll see, Stripe here, do you have a phone number I can call? No. Well, they say that this is because they find it's better to start with email, but let's say you're a merchant and you have an urgent request and need to contact your processor immediately. This actually makes for quite a headache in contacting them. Square, unless you sign into an account, also does the same thing. They do not make it easy to simply give them a phone call if you're having any issues with processing. PayPal is a bit better than the other two, and then they actually provide you with a phone number you can contact. But again, if you have an account that gets frozen with them, their behavior, in my experience and with my clients' experience, tends to be similar to that of Square and Stripe. So for all the simplicity of signing up for Square, Stripe, or PayPal, this simple onboarding process does not mean security for your merchant account or your money. One of the main issues that many of my clients have with Square, Stripe, and PayPal is that they'll end up freezing their merchant accounts. So if your business is non-traditional, you are definitely vulnerable to having your account frozen by an aggregator. And once they freeze it and close your account, either temporarily or permanently, they tend not to look back. Again, this is because it requires a lot of time to sort out a potentially fraudulent business and is less profitable than acquiring several new ones. Account freezes happen all the time. If you're a legitimate business, though, you have nothing to worry about, aside from finding a real merchant account as fast as you can. Accounts are generally frozen when a processor sees suspicious activity or wants to review the business practices. Suspensions and fund withholding can last up to 6 months, so usually it's anywhere from 30 days up to 180 days. The review process for this can be quite slow, and this part may actually surprise some people. The funds that they hold of yours can even be reinvested by the processor. So while you are waiting for money to be released, they may have policies that they hold it for 90 or 180 days, and in that interim time, they actually take the money and reinvest it. So why do aggregators freeze accounts, or processors in general? Well, if you have unusually high price sales compared to the average, that is, let's say normally you sell tickets for $5 a piece, and suddenly you start selling tickets for $5,000. Unexpected higher volume processed in a month can also be a red flag. Again, so let's say normally you do about $20,000 in business a month, but for some reason you have a month where you do $80,000. Sporadic processing is also an issue. So let's say you'll take credit cards, and then 1 month you won't take any credit cards, and it just seems to be all over the place. High chargeback ratios. So if you have more than 1% of your monthly transactions charged back, then this can be a potential red flag. What that means is that when someone has bought a good or service from you and wants to return it, instead of talking to you, the processor, and making a return, they simply dispute the charge with their bank, and this is what's known as a chargeback. If you're in a high-risk industry, including nutraceuticals, alternative medicine, consulting, or financial services, and then certain e-commerce businesses. There's a whole lot more high-risk industries, but we don't have time to list all of them here. When your account gets frozen, if there are no flags, a merchant can process potentially for years until a change occurs. I've had some clients where they were with Stripe for a long time, but then maybe their business took off and they suddenly started making a lot more money and found that their accounts had been frozen. Merchants usually find out their accounts have been shut off when they can no longer process. So they go to accept a payment, and the payment ends up being rejected. There may be some warning signs, though, that you can take a look at to figure out if you're in risk of being frozen. So if you have a new revenue reserve or other money holdings by the processor, they'll say this is to cover chargebacks and their potential liability. It could also be a red flag that they're going to potentially freeze your account. So when your money is held, it's probably time to look for another processor. When your account is frozen, most aggregators will offer little in way of support and may even obstruct quick resolution of your issue. As I said, their investment in retention is quite lacking, and the upfront fees and processing are more important to their business model than keeping a few customers who may be potential problems here and there. So even if your business has done nothing wrong, it's unlikely that an aggregator will support you. When your account gets frozen, the first thing you should do, of course, is to contact your processor. Find out why the account was frozen, and forward them documentation proving your legitimacy. The second thing, of course, you should do, because that process is going to take some time, usually 30 to 180 days, you should definitely find a new merchant account immediately. Especially if you're running a business where your income or someone else's income and livelihood depend on having funds available. Because again, like I said, it could take weeks or potentially months for the aggregator to unfreeze your account. So dealing with a frozen account, when your processor freezes your account, they will request additional information about your business to prove its legality and credibility. Sad to say, but unfortunately processors quite often have to deal with fraudulent businesses and accounts, and so they have processes in place to review financials, legal liabilities, and will decide whether or not they want to continue working with a merchant. Or they'll simply inform you that your account does not meet their underwriting requirements, aka it's high risk, and any processed revenue not yet credited to your bank account will likely be held for a period of 3 to 6 months. Or they'll ignore your request for help, likely due to inadequate staffing. From there, a bank underwriter will assess whether you are a risk to the bank. Now, a lot of this actually depends on the underwriter's understanding of your industry and business in particular. So what you're going to want to do is to do everything you can to prove the legitimacy of your business to the underwriter. So you'll provide them with things like bank statements, identity verification, so like your social security number, your federal tax ID, driver's license, articles of incorporation if you have them, utility or other business bills, and pretty much any other documents that you have that can show that you are a legitimate business. But unfortunately, showing that your business is legitimate is a long process that may not in the end get resolved. As I said, aggregators are simple upfront, but can be a headache on the back end, and don't necessarily have the time or the desire to keep your account open. If you do a bit of research though up front and prove your business to a real underwriter, it can save you a lot of pain down the road. Finally, what should you look for in finding a new processor? Well, first you should always request to talk to a full agent or a manager with any processing company you are looking into. Avoid online or automatic onboarding. Of course, you don't want to run into the same sorts of issues you had before with your Stripe, Square, or PayPal account. And if you end up talking to a salesperson, it's most likely that he or she will not know much about your business or your industry and will simply try to make a sale. So what these people often do is they have their scripts, they have their applications, and as quickly as possible, they'll tell you they can board your account and that you just need to fill out an application and pay an application fee. And what ends up happening after about 2 weeks, they'll come back to you and tell you they're so sorry, but they could not onboard your account. So to avoid some of the issues that you might have in finding a new processor, you should ask lots of questions. Do they have other clients in your industry? Who is their acquiring bank? Do they have more than one acquiring bank? This is important because multiple acquiring banks can help mitigate any risk they have. So if one bank shuts you down, one of their other partners may be able to onboard you. Or you could even potentially set up multiple accounts with the same processors and different banks at the same time. What documents, fees, and rates are required for your industry? So if they don't ask you for additional documentation up front, it could be a sign that the processor is just looking to make quick money on some upfront fees. Is there a reserve requirement? If so, how much? As I said before, reserve requirements help a processor mitigate their risks and will make it more likely that they will onboard you. What's the processor's batch out schedule? For high-risk accounts, it can be anywhere from 1 day to 2 weeks. But if it's longer than 2 weeks, then you have to be careful and beware of potential fraud. There are some shady people out there who will try to onboard accounts, sign you up, hold your money for, say, maybe 3 weeks, and then simply disappear with all those reserves. Are there any chargeback prevention services available? As we said before, high chargebacks are a sign that a business is not legitimate and providing the goods and services that they claim to. If you have a service that can prevent chargebacks, then it will help ensure that your account will not be frozen. So as with anything, you should use caution when speaking to a processor. A real agent will be methodical in their information request to set you up with a new account. It is their job, really, to learn about your business, not to get excited about taking your money. They won't immediately try to sell you on their services, and the vetting process will be thorough and may actually take 1 to 2 weeks. Now, this is, in stark contrast to Square, Stripe, and PayPal, who have very simple onboarding processes but don't necessarily vet their clients as well. So, in conclusion, a real processor and a real agent will be very cautious in making promises to you. I hope that information was helpful for you. If you would like to learn more, you can always contact us at info@horizonpayments.com, or if you need immediate assistance, excluding international PC tech support, click on the link below to set an appointment. Thanks and have a great day.